Peace and great day, everybody. Uh, Today is the day that I start our first vlog for BLAM, Branding, Logos, Advertising, and Marketing. The title of our vlog series is Financial Intelligence. The purpose of this vlog is to dispel the myths of what it takes to be successful financially. Most people think that, you get rich or you become successful by, working a job, starting a business, providing great products and service and things of that nature. And even though that is a part of it, it's not necessarily the fulcrum of the situation. So to clarify it, we're going to use the example of the 1%, the middle class, and the poor class. So the 1%, they're the top, and the reason that they're the 1% is because they make their money off of money, to where the middle class and the poor class make their money from working a job, or even if they have a business, they start their business, the money that they make from their business, it basically goes right back out to invest into the business. But when you make money off of money, it's called passive income, you allow your money to make money for you. And this is what the 1% understands, and this is why they're the 1% and everybody else is the 99%. And so when we say your money make money, we mean things like derivatives, interest, compound interest, things of that nature, to where, for example, if you save $1 million a year in a high-yielding interest account, it will make $30,000 in interest per year just, by you letting your money sit. And then you have a thing called compound interest, to where after you make the $30,000 from the $1 million being saved in the first year, the next year you're going to gain interest on the $30,000 that you made too. So you may end up making an additional $45,000 just by letting the money sit, And so when you talk about the 1%, you're speaking of more the billion and trillion dollar income and financial level. So if you make $30,000 off of $1 million and you have $1 billion, you can afford to save $10 million a year, and then you gross $300,000 a year just off interest, just by letting your money sit, by not having to work. Whether you go to work or not, your money is being made. Whether the economy is bad or the economy is good, your money is being made. And actually, if the economy is bad, you make more money, because anytime the economy is bad, the interest rates are higher on loans. So therefore, your interest rate will be higher in your high-yielding interest account in your favor. And so this is the difference between wealth and poverty. And so finances is a thing like real estate. When you grow up, you go to school, you need a house, but they don't really teach you the ins and outs of how to purchase a house, what's going to be required to get a house, and the whole process, so that when you become an adult, you clearly understand what it takes to get a house and, to move in. And so finances is the same thing, to where, everyone needs money to succeed and live, but unfortunately it's not something that they teach you in school in a usable fashion. So the main thing, the first myth is credit. A lot of times when we grow up, especially in the black community, people tell us to stay away from credit, not to use credit. And it develops a stigma around the whole idea of credit. But the majority of black people go get a student loan. And the student loan is based off of your credit. But unfortunately for us, as black people, a student loan isn't financially intelligent. Just because of the simple fact that you get approved for the loan, but you give your loan that you approved for to the school first, and then the school turns around and gives you whatever they want to give you from the loan that you got approved for. So basically, the first thing that I want to express to our followers is that if you have a child and your child doesn't qualify for a scholarship to go to college, don't get them a student loan, because as we can see from past experiences, even if you graduate, a lot of people don't even graduate, but they still owe thousands of dollars for student loans. But even if you do graduate, you have to get a job, which most jobs not going to hire you right out of college if you don't have any experience, and that leads you to work a job that's not even in your field or in your major, area of major and expertise. So you end up working a regular job, and you still have this great burden of student loan debt, which basically renders you poor until you die. But as another option, everyone credit starts fresh and clean at 18. That's why you are approved for the student loan so easily, because you turn 18, your credit is clear. So instead of going through the backwards student loan process, take the initiative upon yourself to get your own loan directly from the bank. Now, it may not, you may not get approved for the loan as soon as you turn 18. So what you have to do is first get a banking account with a checking account and savings. Get your job where you have constant income coming in, and you want to save. Good practice is 10% of your income. So after developing a relationship with the bank, let's say 6 months to where your account has never been in the red, and you've been consistently saving money and you got direct deposit. So after you do those things for 6 months with a clean slate of credit, then you'll be eligible to get a loan. Or you can get a credit card. A credit card is better than a loan because after you pay the loan back, you have to go through another qualification process to get another loan. But if you have a credit card, once you pay your credit card bill, you have access to the capital again on your credit card. So the credit card is more valuable and usable and beneficial than a loan. And so from there, if you just save your money and build your credit, the other main thing is when you have a credit card, the rule of thumb is to only spend 30% of the total balance on the credit card. So, for example, if you have a $1,000 limit on your credit card, if you follow the rule, you would only spend $300 out of $1,000 per month, and then you want to pay it. In theory, you want to pay the entire balance off every month. But if you can't pay the entire balance, make sure you at least pay more than the minimum balance. Never pay the minimum balance on your credit card bill, because that's going to reflect negatively on your credit report. But if you pay, $5, $10, $15, $20 over the minimum balance, it doesn't reflect poorly. And if you've only used 30% of your credit, it's not going to reflect in your score with a major impact. You may drop maybe 1 or 2 points, but it's not going to be anything significant. And so that's basically what I wanted to express in our first show about the personal credit and something that's been plaguing our community, the student loan issue. So parents, if your children live with you, they turn 18, they didn't get a scholarship, don't kick them out the house, don't make them get a student loan and go to college. Just start charging them rent, tell them to get the checkings and savings account, make sure they start saving, a portion of their check, and after 6 months, help them get a credit card. Make sure they pay their bills on time, follow the rule of thumb, 30% rule, and most of the times, every 6 months, as long as you're paying your bills on time with the credit card and you're following the rules and everything, they double your credit limit. So if your child is 18 and they start off with, let's say, hypothetically speaking, $1,000 credit limit, if they follow the rule of thumb in good practice, in 6 months from 18, they'll have a $2,000 credit limit. 6 months from there, it'll be $4,000. See, and so on and so forth. So by the time that they turn 30, even 21, 3 years of that, now that's the difference between your child being broke like everybody else at 21, or they're being worth $20,000, $30,000, at 21. And the fact that they have good credit, they don't have any issue purchasing a home, a car, or anything that that matters or is important to an adult in your adult life. And so the next thing that I want to express to the community in reference to financial intelligence is becoming a business owner. And especially for black people, because black people, technically we're still slaves here in America. The Emancipation Proclamation did not free slaves. It just basically transferred the slaves from personal ownership to the ownership of corporations. So now it's illegal for a individual to own a slave, but it's legal for corporations to own slaves. And that's why most of the time when you work a job, you feel like you're on the plantation, because technically you are. And it's not a thing to feel less of a person or, have low self-esteem because you have a job, because you may have to work a job to build up your capital so that you can invest in your own self, which is cool and understandable. So if you do have a job, don't quit, but work on becoming a business owner, owning your own business, because that's going to put you in an area to where you can capitalize off your talent. So, for example, if you work for IBM, if they're paying you $60,000 a year for IT, just imagine how much money you could make if you had your own IT business and they were paying you as a company versus an individual that they hired. So that's one of the perks. The other perks is a lot of the times places that you spend your money at have business accounts, like, the airports, rent-a-car agencies, restaurants, office supply stores, things like that, to where the fact that you are a business, you don't have to pay the same as everybody else. And you also get the opportunity to purchase things in wholesale, in bulk, which gives you a better rate. But the most important thing, especially for black people, in becoming business owners, is it's your chance at freedom, because corporations fall under different law structures than the individual person. And the black person here in America, we fall under even more different laws than the white person or the non-black person here in America. So you have three separate, I would say, levels of the law. At the highest level, you have the corporations, to where you see corporations poison the water supply and, damage land and people based on, making their product and manufacturing it, and the waste and everything that they produce from, their production plants and things like that. It violates the environment, and, it injures people, animals, plants, and things like that. But you never hear about any corporation or any member of a corporation going to jail. And it's because there's a law that if you have a business and something impedes you from making money, then you can sue them. So, for example, if I own a cell phone company and the development of my cell phone company creates runoff and waste, and I put the waste in the environment to save me money, if someone comes and try to report my company for polluting the environment, and then that report in turns causes me to lose money, I can sue them because they cost me money. So as a business owner, you're protected by anything that would jeopardize your business and the ability for your business to make money. And the last main thing why I stress people becoming business owners and entrepreneurs is a thing called business credit. So now we discussed personal credit previously, and just some basic information. Later on in later vlogs, we'll go more in depth, as far as how to get your credit established, how to repair your credit, and things like that. I just wanted to give a plain overview about, what the vlog is about, and the main 2 points that I want to stress to our community as black people, so that we can start getting on the track to financial intelligence and financial success, and quit setting ourselves up for failure before we even get a chance to get started. And so now with the business credit is exponential. More so, the personal credit is step by step. So if you establish your business credit, and let's say they give you $5,000 starting off, if you follow the 30% rule in good practice with your business credit, you may go from $5,000 to $15,000 on your business credit limit, or even $5,000 to $20,000 on your business credit limit, and then from 20 to 50, from 50 to 100, from 100 to 300,000. So it's exponential, and the reason that it's exponential is because businesses have overhead. So a business 9 times out of 10 is going to spend more money per year than an individual, and so therefore the credit companies and the banks and everybody know this, so that's why they feel more comfortable giving money to a business than they do an individual. And as we said before, the laws are different for a business, and the money is insured differently for a business, to where if the bank loans you money as a personal entity, their insurance is not going to be as beneficial to them as it would if they lend that same money to a corporate entity. And so therefore they have a lot more leniency as far as the money that they give you as a business owner. And so that's basically it for our first vlog. So to recap, study finances, because they're not going to teach you that in school. So you have to do your own personal research. Build your personal credit. Study credit. They got a lot of free apps now. CreditSesame.com, CreditKarma.com. They give you your free credit score, and they give you suggestions on what you need to do to improve your credit. And start a business. A lot of times people say, well, I don't got enough time to start a business. I don't have no money. It's no excuse. It's free to think of a name for your business. Social media is free. You can make, some social media pages for your business. Get your friends and stuff on board. And they have some free apps that you can make your little makeshift logo for your business until you're ready to invest in it. But what you have done is created a platform to where once your business is erected, you have an audience, to present your product or service to. And that's the difference between you not doing that, naming your business and things like that, and you just wait till you get some money. And then when you start your business, you got to take another, 6 months or however long it took you to start your business to build up your audience so that your business can start making money. So if you start now, even though you got a job, you might not sell one product or service. You're creating what's called brand awareness. And from that awareness, you can create your audience and your following to where when you are finally able to create a business and erect a corporate entity, you will have an audience to market to. And then the last thing is the business credit. That's your way out. That's your key to success. That's financial freedom. Because there really isn't any money in America. The middle class is extinct. We only have the 1% and the poor class. So therefore, we have to start as the poor class adopting similar financial practices of the 1% so that we can revive the middle class as well as, increase the 1% to maybe 2 or 3%, or maybe even 5% by becoming business owners, dealing with high interest yielding accounts, dealing with passive income, business credit, and things like that. So that's going to be it for today's edition of our vlog. Thank you for following us. You can reach us at our website, www.blampromoco.com. That's BLAMPROMOCO.com. And we also have a nonprofit organization centered around the financial success of black people. So if you would like to donate or contribute to that, it's We Rise, WERISE, 2 words, on GoFundMe. And you can also find a link to make the donations on our ordering page on our website. So again, thank you very much for following our blog. Make sure to stay in tune. Follow us every week. It'll be a weekly blog, and feel free to reach out to us about any information that you need in reference to financial intelligence, personal credit, business credit, or whatever. So again, thank you very much, and have a great day.